Evaluating whether Joby Aviation is a good company involves looking at its operational strengths and risks, as well as its viability as an investment. As a company, operational strengths and industry position, pioneer in a transformative industry. Joby is at the forefront of the eVTOL and urban air mobility UAM market, which has the potential to revolutionize short-distance transportation. They are one of the most advanced players globally. Significant FAA Certification Progress. Joby is widely considered to have a leading position in the FAA certification process. They have completed key stages, including initial FAA testing under Type Inspection Authorization, and are making record progress on the fourth of 5 stages for commercial passenger use in the US. They have also secured a Part 141 certificate for their flight academy and acceptance for their safety management system, which are crucial for future operations. This regulatory lead is a major competitive advantage. Strong strategic partnerships. Joby has secured high-profile partnerships that lend significant credibility and support. Toyota provides manufacturing expertise, helping Joby scale production efficiently. Toyota has also made substantial investments. Delta Airlines collaboration focuses on integrating air taxi services into Delta's existing travel network, particularly for airport connections. US Department of Defense. Joby has delivered aircraft to the Air Force and is actively involved in testing and development for military applications, providing early revenue and operational experience. Uber. Integration into Uber's platform for booking services. Vertical integration. Joby designs, builds, and plans to operate its aircraft. This vertical integration allows them greater control over the entire user experience, quality, and supply chain. Robust financial position for a pre-revenue company. As of Q1 2025, Joby reported strong liquidity with approximately $813 million in cash and short-term investments, and total liquidity around $1.3 billion, including Toyota's investment. This provides a substantial runway for continued R&D, certification, and scaling before significant commercial revenue begins. Manufacturing expansion. They are actively expanding their manufacturing facilities in California and Ohio, preparing for large-scale production, up to 24 aircraft a year at Marina, eventually 500 aircraft a year at Dayton. Early commercial readiness. Joby plans to deliver an aircraft to Dubai by mid-2025 for flight testing, ahead of carrying first passengers in late 2025 or early 2026, where they have exclusive rights to operate air taxis for 6 years. As an investment, Joby stock. High growth potential. The UAM market is projected to be immense in the long term, and Joby is well positioned to capture a significant share of successful pre-revenue and not yet profitable. This is the primary financial risk. Joby is currently in a heavy investment phase, R&D, certification, manufacturing scale-up, and is incurring significant operating losses. While their gross margins are strong, over 53% in Q1 2025, net profitability is still some years away. Forecasts suggest not before 2027 to 2028. Significant cash burn. While well-funded, the company is spending substantial amounts annually. For example, forecasted $500 million plus spend in 2025 to achieve its goals. High valuation. As of mid-July 2025, Joby's stock has seen substantial appreciation, for example, over 200% in the last 3 months, 77.4%. This means a lot of future success is already priced in by investors, making it sensitive to any setbacks. Volatility. The stock is highly volatile, typical of speculative, high-growth companies in emerging industries. News related to certification, production milestones, or delays can cause significant price swings. Execution risk. The path to commercialization is complex and involves technical hurdles, regulatory challenges, scaling manufacturing, and building out the necessary infrastructure, vertiports, charging. Any significant delays could impact investor sentiment. Competition. While Joby has a lead, several other well-funded companies, for example, Archer Aviation, Lilium, Vertical Aerospace, are also developing eVTOL aircraft, creating a competitive landscape. Analyst outlook. Analyst consensus is generally buy or moderate buy, reflecting optimism. However, average price targets around $9-10 as of July 2025 often suggest a downside from the current higher trading price $17.78 as of July 18, 2025, indicating some caution about its current valuation. Conclusion: Joby Aviation is a pioneering and highly promising company with significant technological, regulatory, and strategic advantages in an industry poised for massive disruption. Their progress towards FAA certification and manufacturing scale-up is impressive. However, as an investment, it is high risk, high reward. It's a growth stock for long-term investors who believe in the vision of urban air mobility and are comfortable with the fact that the company is currently pre-revenue, not profitable, and its success hinges on flawless execution of a complex plan. For potential investors, thorough due diligence, understanding the long-term vision versus short-term financial performance, and assessing your own risk tolerance are crucial.